All right. Hey, everybody. Welcome to the Tribal Trades, the daily show. And we have an esteemed guest, an absolute legend in this space, in my opinion. Stocks with Josh, my very first ever guest. It had to be you
I love it.
on the page. And so, welcome to the channel. We're continuing over from Josh's. So, if you missed the first part of this, you're going to have to go to Josh's page to watch the part one of this esteemed two-part series here that we're putting out here. And so, it's great to be here with you, Josh. Welcome to the channel.
Thank you, Mark. I appreciate you having me as your first guest. It's an honor to me. I love Mark's technicals. I trust Mark's technicals. He's a very attentive to the community. He has his own community. He does work in the Stocks with Josh community, and he connects with people. And I think he's helping a lot of people. And I'm here to. We're gonna have a great show. I'm looking forward to the subject matter.
Fantastic. Well, we're going to just jump into the SPY and Bitcoin. I'm going to give a couple of thoughts there to carry on from what Josh had been talking about. And then I think we'll put Josh to work a little bit here, and we might get his chart genius.
Well, you know, I don't think I have the ability to show my chart on your page.
No, but I can bring it up, and you
Okay,
can.
okay,
Yeah,
okay.
we can.
Sounds good.
I can be your operator
Sounds good. We'll do it together.
there for that one there. So I'm going to jump in first and foremost to the SPY here.
Can I chat on while you're doing that?
Absolutely.
You know, just a couple comments from the last show. I was scrolling as we were prepping to move over here to Mark's page. And I'm not going to, this is not negative towards anybody, but somebody said, we're going to pop here. This is a cup and handle. This is not a cup and handle. This is not a cup and handle. So, you know, there's no pop necessarily coming on the basis of a cup and handle structural pattern. So I can't agree with you, my friend. And another one, Fast Eddie said, Josh, how do you control your urge to swing your long-term positions when you have so much confidence in your technicals? You know, it's a great question. Mark was actually asking me about my long-term positions just earlier today, and I was like, nope, just buying, not swinging. There are some things I do very strategically on a very high time frame to hedge positions at certain times, but I'm not selling anything. When you commit to a stock long term, you're accumulating it, like I am with Netflix, down at $82 and $80. When you commit to a play like that, what you do is you sell puts against it beneath support, and so you just collect premium and you use it to buy more Netflix. You use it to you sell more puts, which will never get ideally in the money. You collect that premium, you buy more Netflix. And so you really shouldn't be swing trading because you'll be tempted, you'll make the wrong move, and you'll end up. Now you can do what you want to do. I'm not a financial advisor. I'm not here to tell you what you should buy, sell, or hold.
Yeah, no, thank you for that. I think that's and that was something I asked Josh about. My strategies are a touch different, you know, but let's look at the SPY first and foremost here. And what I want you to zone in on is we have the 9 EMA on the weekly here at 683. We have the 100-day moving average at 681, and the 20 EMA on the weekly at 677. So not only have we closed below the 9 EMA in the weekly, and we've got that second close. It's a red close, which historically has meant a much deeper downside. But we've also lost the 100-day. This is the first weekly close under the 100-day since February last year. And we also now have that close under the 20 EMA on the weekly. So that's triple bearishness right there. Now, look, as Josh pointed out on his show, there was bearish divergence in the chart. The issue always with that is that we don't know how long that's going to take to play out. You could have bearish divergence in the chart, and it can run up and run up and run up, and you miss out on a ton of gains there. And so why make people aware of that it's coming, you just don't know always, you know, when it's coming. And I think that now we have those 2 weeks, but is this going to be a trap? I mean, Josh, what do you think will happen if we have a tweet from the White House over the weekend? People are like, oh, they panic sold all their stuff on Friday, and maybe people still have a chance to de-risk, take profits, panic sell. What would you say to a person now? And then thinking, what should I do? Because if Trump tweets, hey, Iran has surrendered, the regime is giving up, the people are taking over, and obviously the price of oil is going to decrease, we would expect a very green Monday. Is that
Well, there's two things I want people to take away from this moment. Yes, this is going to be a headline news driven market. We're not at the moment dealing with inflation, but we're going to. We had a very bad non-farm payroll report today, which was actually quite ominous. It showed a dramatic decrease in jobs, and there could be an anomaly in that. There's always like the consideration that this was a one-off bad data report, but they're going to be looking very carefully when we get into April. I think it's April 4th, but don't quote me on that. They're going to be looking at that next report to see if it's a trend. If it's a trend, then the market people will begin to talk about recession at that point. But I'm not calling for that. What I'm telling you though is that this is a headline-driven market. When oil is up, it means that inflation will go up, and we have a president that's, while simultaneously waging war against Iran, is waging economic war against the entire world with 15% tariffs, and so that's a lot of trouble on a lot of different fronts. And what it means is the market's got to price in that uncertainty. I love this market. This market's been all about these flash crashes with quick recoveries. It's been for a long time. It's been a buy the dip, buy every dip,
Yeah.
sell every rip environment. And I don't think we're out of it yet. I think the market, if it gives us a bigger dip, it's going to be a buying opportunity. I'm not in the camp, even slightly, that we are moving towards recession. That doesn't mean it couldn't happen. It does not mean that it couldn't happen. We're going to find out a lot about inflation in April, and then that's when you're going to see Wall Street react. But for the time being, that's not why the market's going down. The market's going down because oil's going up, inflation is potentially going to follow. We've got tariffs, war still occurring, and then Trump said today, he said a number of things that almost seem to be intentionally aggravating the market. One of them, when asked about how long the war in Iran would last, he kind of said, well, 4 weeks, maybe longer than 4 weeks. And then he went on to say, but it could be a forever war, right?
Yeah.
And then,
Wow.
while being asked about this war, he's like, yeah, when we wrap up here, we're heading over to Cuba. So we've already got the next war queued up. Now, I actually believe that within 4 to 6 weeks, and don't take this as an exact thing, because you got to take Wall Street one day at a time. But I think that we are going to see a lot of these things get worked out very quickly. There has to be some uncertainty priced into the market. Not everything's going to go down. I think Microsoft and there's some other stocks that are positioned to go higher. We aren't going to see everything go down right now, because there's things that are already down 50 to 80% that are going to begin to move higher. We've already saw that with the enterprise software companies. Quite a few of them been ripping during this week of war. And so I'm on the view that we do have a couple weeks here of trouble, but it's going to present a opportunity to buy. Now, let me just want to throw this idea out, Mark. If the opposite of that happens and we somehow jump back up, I know this stuff is tricky, and
Yeah.
some people will say, well, you're saying two different things at one time. Yes, charting is an if-then scenario. It absolutely is. If we have an extremely positive headline news event that suggests that the war in Iran is over, then right away the market's going to shift. Oil prices are going to plummet over the weekend, and Wall Street will open up green, and we will go right back up, right? But here's what I want you to understand. When I went back through and looked at the SPY, the S&P 500, and looked at anytime two weekly candles close beneath the 9, when that ever happened, even if there were a 2 to 3 week recovery after that, it still brought on a really big dump. And so I'm telling you guys that no matter what happens, the fact that we've had 2 weekly candles close beneath the 9 today, whether we spent the next 3 weeks going up, that is going to be the biggest bull trap, because whenever you get those 2 week candle close, any green candle after that was a lie, because it was pointing to a bigger downturn. Where are we going to go? Well, I mean, we've got all this support, and we've got a neckline at 650 to 645 that's calling the prices to come down, and like a magnet pulling that price down.
Yeah, I think that's great. And I think what I've got here is kind of supports that theory that usually what we see is when we see 2 red candles. Now, usually if it's a red one and a green one, it's not as severe and it doesn't go down as hard. But we had 2 weekly candles close and they're both red. that's generally led to about a 5 to 6% drop at least from the 9 EMA on the weekly. That's from 683. So I've measured that right now from 683, 6%. That takes us down to right around your level, around that 640 to 650 level. In fact, the 50-week moving average, which is our bull market support, it's classically a bull market support level, is sitting at 639 there. So even if there is some good news, this could be a bull trap, is what Josh is saying. It could just kind of pop up. And what we could see also as well, I would be very surprised if we didn't come back and retest this level 677, which is the 20 EMA on the weekly, kind of shoot up and reject, just in the same way we dropped, we shot up, we tested that 9 EMA in the weekly, and we rejected there. And we don't want to see the 9 cross the 20, because that's my sell and go to the beach signal, Josh. We've been talking about that, because historically, yes, when you see the 9 cross below the 20, that is extremely bearish, and we will see a much deeper correction than the 50-week moving average. It could go a lot lower than that, and we don't want to see that. And we haven't seen that since the February drawdown of last year. So that's the SPY there. We'll have to wait and see what happens over the weekend, what gets tweeted from the White House or from DJT account there about Iran. And it is one of those markets where you have to have one eye on the charts and one eye on your Twitter or X feed, or on your news feed, wherever you choose to get your news from, to kind of respond to what's going on in the market.
Can I throw a couple things out, Mark?
Yes.
So first of all, if you guys came over here from my page to watch Mark today, thank you for doing that. Let's show his page a little love by hitting the like for sure and dropping a comment. That feeds the algorithm and pushes out his hard work to more people that he can help. I want to just comment on the SPY that, again, I know how this works, because this is something that retail's unfamiliar with and they don't want to hear. And that's that this if we were to get all the way down to 650, that is a light stress test for the market. Okay, I don't know if you can throw our faces up. I want to look people in the eye and say this to them. If we were to get all the way down to 650 and 645, that's not a bear market.
No,
that is a light stress test, and the up move has to be tested. Okay, and since April of 2025 till today, we should have had 2 minimum of 6% stress tests, and we've only had 1. And so this would just be a business as usual. Market is bullish, continuing the uptrend, reasonable stress test, not even too significant. And so don't panic. This is a very healthy, bullish market. We're still in the AI rally, even if we see some really ugly week next week, which I'm not calling for, right? I'm just telling you the 2 candles we got, the volume, the break of momentum, those things signal that a stress test, even if it's not next week, is coming. And so you need to consider, how am I investing? Am I swing trading? What stocks do I want to own more of right now on any pullback that might occur? If we do go up and not immediately down, is there anything I want to get out of that would be dangerous to hold if we were to drop big over the course of the next month? Largely, and just put this whole conversation into perspective, I'm bullish over this period of time, because normally during this time into summer, the markets are rallying still in a midterm year. It's not until you get into the summer, into the fall, that you begin to see what is typical, a 19% pullback on a midterm election year. So this is still the period of time in which the market typically shows resilience and strength.
Yeah, absolutely. And I think I agree with you. I think it would be quite healthy. I still think it would be quite healthy. A 5 or 6% drawdown would be, we need new money to come in and buy the dip, and also build some support and structure there. Rather than, we just can't keep going straight up. It's just not sustainable for a healthy market. I just think if we keep going up, the bigger the fall that would happen there. Let's pivot to Bitcoin, Josh, and then we're going to do a couple of chart requests, I think. Here, I'm going to put you to work. But first of all, let's talk about Bitcoin. I want to talk about the Bitcoin chart. I'm going to share first, and we get Josh's thoughts, and we're going to go to what I call the yellow brick road. which is the liquidation levels, and just show you some things that I think can really help you out. And these are some free tools that you guys can download and use, some free apps that can really help you. I use it with a chart. I just don't go off the liquidation levels. But first of all, let's have a look at Bitcoin. You can see how important the 9 EMA is there, and when it loses this dark pink line up the top here, and we have 2 candle closes below it, it's gone. And then the 9 crosses below the 20. That's my sell and go to the beach signal. That's like get out, bull market's over, or the bull market trend is over, it's time to get out. And if you look, actually, if you'd gotten in the last time the 9 crossed the 20, that's my buy and go to the beach signal back in April, you would have gotten a gain up from about 84, 85. You wouldn't have quite caught the bottom there, but you would have had confirmation, and then you could have just bought it. And that's why I call it go to the beach, because from April through to when it crossed back to the downside there at November, you could have literally gone on a cruise, gone to the beach. And that's my way that I trade Bitcoin, as I literally...
Well, can I chime in on this?
Yes, I'd love you to.
So from his technicals that he's giving you, the 9 crossing up above the 20, eventually, when it begins to peak out, you'll begin to see the momentum indicators will be the tell.
Yes.
And so you say, well, if I wait until it crosses back below, I've given up a lot of profits. Well, you don't have
Correct.
to. You can watch those momentum indicators, because each of these pullbacks would only be a reset, right? It'd only be a reset of momentum, but eventually it wouldn't be. Eventually it'd be a momentum indicator loss. That'll tell you that it's time to begin to lock in profits before the 9 crosses back beneath the 20. But truthfully, what Mark's teaching everybody about the 9 and the 20 is golden. It's a great way of referencing, where are we at right now? If you had waited for the 9 to cross above the 20, you could have bought every red candle with confidence, knowing the big picture view. It's why we look at the big picture view on the bigger time frames, is to give ourselves more confidence of what the overall direction is right now.
Yeah, I mean, look at this back in January of 2023, Josh. All you had to do was buy when the 9 crossed the 20. Price was 19,000, 18,000 there. And then, of course, it crossed again at 27. You would have put your second buy there. And then it just continued all the way up. It didn't quite cross there. It continued up. And it kept going, really. It came down. It kind of kissed. And really, you could have actually bought it every time there was kind of a touch or a convergence of it, not quite crossed below, and just all the way to the top. And then, of course, there's your get out, sell, and go to the beach. Literally, just a couple of years later, you could have just used that method and traded Bitcoin really effectively. I think it would have saved a whole lot of people. And so that's a strategy that I use. I'm not a financial advisor. And this is not financial advice. We're just here for education and entertainment purposes. Hopefully you're all entertained. I appreciate you guys. So that's what we're looking at the moment. So I just give you that quick little thing. But now I want you to know something here. When we lost the 9, what Josh showed on the SPY also is the same for Bitcoin, because each time it comes back, retests off the 9, that's when you can go short. So 2 candles below, go short, comes back, retests the 9, go short, come back, look what it did. Retest the 9, go short. And that's why Josh and I sold. And we did the video just a couple of days ago. So what will happen here? I'm going to tell you what my plan is from here. If we bust through the 9, I'm in.
Yeah,
I'm in. And if we bust through the 20, I'll add to the position, because what is that going to do? It's going to drag the 9 above the 20, and we're going to get our buy and go to the beach signal. Okay. Now, also, you can try and front run it.
What I like about what you're saying, Mark, is just helping people realize that you have to pivot with the data you're being given.
Yes.
For the time being, we saw rejection. But as Mark's saying, if we end up getting above it, don't fight it. Don't fight the trend.
Yes. And you can see the same with the 9 EMA on the daily. So you can kind of front run it to a certain extent. It's a little more risky, but look at the same thing. Shorted off the 9, shorted off the 9, shorted all the way off the 9. When it breaks through the 9, that's when I went long. That's when I got in a trade at about 68,000. And then, of course, rejected at the 9 EMA on the weekly, which we just showed before was there. Now we're back below. So where would I take a trade? I would take a trade. I like taking trades on the way back up, because I don't like trying to catch a fallen knife, right? So I like watching something come down, and then as it comes back up through, and we almost have a buy and go to the beach signal actually on the daily time frame, which can be a good signal to buy, and it would have been, as it just slightly crossed, and now it's rejecting because it gave that little shot up there as well. So there's a few little things that if you're worried about missing out on the run up for Bitcoin, there are a few little strategies that you can employ. Use the 9. I use the 9 and I use the 20 on the daily time frame, on the weekly time frame. Look, you could even do it on the 3-day time frame as well. Sometimes I'll flip to that, and if there's a cross there, then I feel like, well, maybe we might get a cross on the 90 EMA on the weekly. But I can tell you this: look, if you take a cross of the 90 EMA on the daily and then it doesn't cross the weekly, that's when you get out. You can't just go, oh, it crossed the 9, now it's going to be good, it's going to cross the weekly. No, that's not necessarily going to be the case. Let me take you over to what I call the yellow brick road, and this is what I use with the charts. Now, this is a free app. You can go to coinglass.com. You can also download the CoinGlass app on your phone. And what it's going to show, it's a liquidation heat map. And you can see, look where price went. It went to the highest levels of liquidity on the chart. So it was very easy to say, look, and this is what I said to Josh the other day, all the liquidity is down here at 70 and 69. I said, that's where it's going to go. And that's exactly where it went. But look where the liquidity is now. It's a little bit above price. So I wouldn't be surprised if we came up and maybe wiped out some of this here to that level of that $72,000 level that is there. Now, that's on the shorter time frame if you're just swinging Bitcoin. If you're wanting to go a little bit deeper there, you can expand your time frame and see that there's actually a little bit building up. Now, this wasn't here before, but of course, when Bitcoin pumped up, and you can see, what did it do? It took out, and that's what I call follow the yellow brick road. You just follow the most concentrated areas of money. It's like, show me the money. The market wants to take this money, and it came and took it. So you do have some. So even though on the shorter term there are some below, you can see the highest concentrations in the medium term. Now, if we really zoom out here and we go on the month time frame, you're going to see something really cool. Look how it took out that liquidity. And I'm going to zoom out a little bit more here to the 6-month time frame, and you're going to see that's what you want to see, that there's some kind of a short squeeze coming, some kind of a pop. And this here is our new bull market forming. Once there is enough here, and for months and months, this can build up and build up. And then when they send it, boy, does it go. And that's what we saw last time from January in 2023. And we saw that big shoot up. We saw that 9 cross the 20, and then it just shot up really without much of a pause here and there. And then off it went. And you can see what happens when it hits these levels is everybody who has gone short is going to get liquidated or have to cover their position, and that causes more buys, and it just pushes the price, and it becomes like this cascading effect upwards. And I can tell you that this money at some point, if I was a market maker, I'm not leaving that on the table there, Josh, at all. What are your thoughts on liquidation heat maps and the role of the market maker in
well,
Bitcoin?
market is always well, I've actually learned some things from you about this when talking about the big picture of Bitcoin moving towards greater adoption. The wash sale factor.
Yeah.
Washington really can't leave that in place. And then this dynamic of how Bitcoin is constantly really a leverage trade. It's all about money washing out these leverage positions above and beneath. That's what's making it move. Now, nobody wants to hear this, and sometimes my opinions are unpopular, but it's, this is what's not driving Bitcoin's price is the idea that it is a hedge against the dollar, against stocks, against gold. That has not materialized. We can put that on the shelf, and if it happens, we'll pull it down and appreciate that idea in the future. The only thing that's driving Bitcoin's price is that more people are agreeing to speculate on it. And then people love this. Wait till I hit this one with them. People are gambling on how long the song for the Super Bowl is going to be, right? So don't act like Bitcoin is so special. The maximalists are hating me right now. Let's just treat it for what it is right now, right? It's a tool of speculation that's largely being driven by leveraged positions. I'm not saying it doesn't have value and that the concept isn't incredible and that blockchain isn't amazing and that blockchain can replace government laws. And it's a digital contract that can't be broken and doesn't need to be governed by a third party. So I love blockchain, but that's not the reason that Bitcoin's going up right now. It's a speculation tool, and at this moment in time, it hasn't proven itself to be a hedge against anything, the dollar or inflation or a replacement of gold. It hasn't proven any of that, and it's been more of a speculative tool being driven by leverage. I love it. I'm trying to get as much of it as I possibly can. I want to get 15 Bitcoin here. That's a good goal for me, and I'll have that here before we emerge out of this bear market. And I'm not going to be a buyer above 100K. I think there's a lot of retail folks that are going to only think about getting back on board the Bitcoin boat until this gets back to where they are sure that it's succeeding. And they'll often buy the latest and they'll hold the longest on the reversal. I did the opposite, right? I'm buying on the red. And so if you're part of that, I know Mark's got a very specific dialed in strategy. People are going to be in different situations based on, the money they're deploying.
Yeah.
And I just simply want to look 10 years down the road, and I want to own at least 15 Bitcoin for my kids and my grandkids, because I do believe that Bitcoin isn't going anywhere. The CIA built it for us and gave it to us as a vehicle to. No, I'm just joking.
Look, before anybody
We got it
pulls up
right.
weapons to try and shoot Josh, look. Two things on what Josh said that I think that are really important that I want to zone in on. One is you might think, well, it's not a hedge. That's not a negative thing, because really what Josh is saying, this is an asset that had 126K, and it's a very immature asset class. Imagine when it becomes a very mature asset class. We could see 250, 500,000 a coin, 1 million a coin.
And on your point, I love the reality.
So I don't think it's a negative that you're saying. I think it's a real positive that the future is bright, but we shouldn't have such high expectations, because Bitcoin's strength and why people love it is its volatility.
Yeah.
You've got a coin that basically will drop from 69,000, lose 75% every bear market. You can buy it back low, and then it will at least go up 700%. And you can do that every 4 years. It's a wealth creation tool. Yeah. And if the 4-year cycle continues like it is at the moment, that can be the case. And whether you're like Josh, who will buy some every day, and you have the dollar cost average strategy, and if you don't have the time to watch the charts, maybe that's you. And if you have the money available to do that, maybe that's you. That's a strategy. Or my strategy is, of course, I shared that before, when it breaks above the 9 or the weekly, that can be a green light for me to jump in a trade. And if for some reason the 4-year cycle is over, I can just keep riding that. I'll add to it if we cross the 20. If the 9 crosses the 20, I'll add more to it. That will be my final buy, and then let it run up. So, because I'm totally open. Josh and I had a great conversation. If you didn't see, make sure you check out his page from a couple of days ago, how he thought the Bitcoin bottom was going to be in around April, and I think it's going to be more around September. And I feel like I'm covered either way with this strategy, because if Josh is right and the Bitcoin bottom does come in April, we're going to cross the 9 EMA on the weekly. We're going to cross the 20. The 9's going to cross the 20, and I'm going to get all those buys in, and I'm going to ride it up. If Josh isn't right, and if the low does come in September, we dump down, I'm going to be fine, because it's not going to cross over those key moving averages. So I'm not going to get in. Or if I do, let's say if it crosses the 9 EMA in the weekly and doesn't cross the 20 and rejects, I would just simply get out of my trade. That's my sell and go to the beach signal there. So you have to find a strategy that works for you. But I would say, those who fail to plan to fail. And so have a plan what you're doing. Don't be an emotional trader that jumps in FOMO on emotion. I have a very clear and definite strategy of exactly when I'm getting in and exactly when I'm getting out there. All right.
Can I just add to that I love what Mark's saying, and it's one of the reasons why I'm, hang with this guy to get a sense of when he gets excited about buying. I am buying a ton of Bitcoin, right? I have a plan to buy a ton of Bitcoin. So what does that mean? I need time to do it. And so if I'm wrong and we don't bottom in April, what is that going to give me? It's going to give me daily buys, one after the other, and allow me to fill my bag even more between now and potentially October. But what do I think is going to happen? I think that we bottom in April because everything is moving faster. That's what we've noticed with Bitcoin, is that we've been on an expedited fast track of movement. We hit an all-time high before the halving for the first time ever in the history of Bitcoin. I think we're going to hit the low faster than ever as well. And if we do trend back up, I believe that when we come to that difficult midterm election part of the year, when we are expecting a downturn, I believe that Bitcoin will go back and hit these lows again, and it'll give essentially a larger double bottom. And now, is that going to happen? I don't know. I'm okay either way because we're not above 100K, we're not above 90, we're not above 80. I'm buying every day during the winter. We can all agree we're in the winter, can't we? Right? I think we're in the winter, and that's when you want to be accumulating. So whether we find a bottom in April and trend back up and then revisit the low in October, or whether we trend down and sideways and hit the final low in October, bottom line is, if you're a believer in Bitcoin, this is the time to buy, not when we get back above 100K. Can I shout out one more thing about the SPY?
Yes, please.
So
let me just, you want me to switch back to the chart there?
no, we're fine. Alan Tran threw this comment out, and I didn't have a chance to search this, but I would, and this is something I will include in my video next. But he said the whales bought 15 million of the SPY 630 puts. Now that's deep in the money, my friends. I want you to listen very carefully. At 11:45 a.m. today, 15 days out. Now this does a few things. It tells us, first of all, that's a very deep in the money position.
Right.
It's a very high dollar amount, and it is a very short time frame. So they're adding some financial confluence to the warning that I've been giving, and why am I giving it is because I have some insight into the future. No, I can look at the chart right in front of me right now and see that there's selling volume, 2 weekly 9 candles, loss of momentum. Now we hear that there's institutional buying that would look like a flash crash in a 2-week period. Man, if you're bullish right now, I don't know what the basis of that bullishness is. Having said that, I'm bullish if you take a step back that the Trump conflicts, wars, that'll all get worked out.
Yeah.
And oil is going to be lower than it ever was historically, based on the fact that, Trump's got Venezuela, he's going after Cuba, he's going after Iran. I mean, he's going to own the oil, he's going to oil syndicate. He's cut out England from the insurance deal. He's taking every part of the oil trade in alliance with Saudi Arabia. And, who knows what else he's going to do after that. So I think the long-term strategy is that stuff's going to come down. What are we looking at?
Money Mike.
Oh, hey, Money Mike's in the house. Glad to have you. Yeah, so stuff will eventually come together. I think this is going to be a flash crash. I think that when I talked about the Tesla chart, I mentioned that they were buying straddles. What's a straddle? It's when they buy a call and the put because they're not entirely sure where the market's going to go. When you buy a call and a put in a straddle, there's one thing that they're sure of. It's not going to stay at the price it is right now. So they're expecting, based on that straddle, a flash crash down.
Right.
They'll sell the puts into profit. They'll probably turn around and buy calls. They'll ride them up in a very short amount of time. Those other calls that they had bought will be deep in the money, further dated out, and all of it will go up. Now we know that there's a large buy of puts in the next 2 weeks, and you got to fit that into your analysis.
Do you think price will go as low as 630, or they're just scaring the market a bit to get them deep with profit as possible?
Deep in the money, I mean, there's a lot of strategy as to why they choose those types of positions. I'll simply tell you that my lowest price that I'm calling out as a potential hit is 645.
Okay.
That's my target. I mean, I think, we'll bounce at 652 no matter what. So we'll come down and bounce briefly at 652. If the market's super bearish, we'll go a little further. But that's when we got to get prepared, because I will do at some point a video with 3 simple words, and they won't be the video I did this last week called Trouble, Trouble, Trouble. They'll be buy, buy, buy.
Buy, buy, buy.
And the last time I did that, I bought 60 leaps on NVIDIA, 60 leaps on Tesla, and I bought all of the Mag 7. And the only thing I regret is not buying 60 of all the Mag 7 and holding them for months. I cashed out way too early. It was a wildly profitable trade. All of those options were $1,200 a piece in profit. And so I wish I had held them longer. I want to get round 2 of this opportunity. And I think the market's a couple weeks away from giving it to us.
Yeah.
So instead of getting fearful, think about what you're doing and get excited about the opportunity.
Yeah, and you mentioned a couple of weeks. One of the things that I went and researched was NVIDIA. And what I've noticed over the last few years, and this is not every time, but the majority of time after NVIDIA earnings, the market actually went either sideways or down for about 4 to 5 weeks.
There you go.
And there was a couple of times that it didn't, but for the most part, NVIDIA earnings was a bit of a top signal, and that's something to consider for future. And I've been sharing that with everybody in the YouTube channel, on the Discord, after that happened, and that's exactly what happened. I'm going to take a couple of questions here. We got, would you guys trade a Bitcoin worth of IBIT the same as Bitcoin? For me, absolutely not. And I'll tell you why. Why would I buy IBIT when I can just buy Bitcoin? Okay, I don't know if IBIT will be trading at a premium or a discount. I wouldn't want to take the time to work that out. I'm paying fees on that every day, and I can't trade it 24/7. If some news breaks out, I won't be able to trade that when I want to trade it. So for me, I would just rather trade Bitcoin as Bitcoin, and I don't go near the Bitcoin ETFs unless there's some kind of major advantage or there's some reason for that. I would just rather trade the actual native asset in Bitcoin. How about you, Josh?
Well, yeah. On another note, the last time I charted IBIT, I told everybody that we were getting ready to break $65.73. And then if we did, we would move down to $44. And all of that came to pass. And, IBIT's just kind of following suit of Bitcoin. Where would the ideal re-entry for IBIT be? The point of control on the chart is $30. Point of control on the chart is $30. And so if we do have some downward pressure over the next 30 days and the market finally begins to account for what's happening in Washington and the rest of the world, and the threat of inflation increasing and oil pushing it and tariffs aggravating it, and we get a bad NFM, non-farm payroll report in April, then yes, something like IBIT's going to go down to $30. And I'm not a buyer of IBIT. I'm not a big buyer of it. But if you own IBIT and you want to choose that vehicle, I just happen to be focused on actual Bitcoin. But if you own IBIT and you want to choose that vehicle, to me, that's the target. Now that doesn't mean it's the absolute possible low. It just means that would translate to maybe a 50K Bitcoin.
Yeah, so I mean, and you'd have to do the math on that. I'm always worried that it's going to be at a premium. I want to buy it at a discount. You did make okay. So IBIT in the Roth ETFs in the Roth is tax free. Okay, so I get that. Look, I think with if that was the case for me, I'd still be just trading. I'd still just be trading the native asset because I just like having the access 24/7. I don't like being shut off over the weekends there. But you just have to understand it's just a bit more of a risk that something could happen on the weekends there with that. Let's do a few more charts here. We have XRP, which we can bring up here and have a look at. But I'm going to say, look, Bitcoin dominance has been peaking, and it just hasn't really been a good time necessarily for the altcoins. You can see it's very flat here. This is like a giant bull flagging kind of pattern. There's really no play on that. We're below the 9 and the 20. Bitcoin's bearish, so there's not much there that I would say on that, unless if Bitcoin does go up and grab that liquidity. I'm just looking at the 9 EMA on the daily, sitting there at about $1.38. But I'm not really trading the altcoins at the moment. I don't think it's altcoin season.
Can I give you some thoughts on XRP?
Yes.
All right, so I'm going to give you guys
the weekly here for you.
Yeah. Take note.
Looks bad.
I probably should do a. Can you take everything off the page except for the chart and the ability to draw?
Yes.
All right. So in my opinion, my technicals matter. If you love XRP, then listen carefully.
Run.
The point of control for XRP is 95 cents. That's the first thing you need to know. The point of control for XRP is 95 cents. I think that if the market is flashing and you see Bitcoin at 50K or even 55K, you will see XRP under $1. Now, don't get XRP Army on me. I'm not looking at what it does. I'm looking at the chart only. All right. When I look at the chart, I dismiss anything I know about the company and I consider what is the truth behind the candles. I always say price is truth. You ever heard the term follow the money? Well, that's what it means when we follow the charts. So point of control is around 96 cents. But if you look at this mark, I mean, draw this out for them, what you see me drawing here, okay? This is a W pattern, which is bearish, right? When these confirm,
Yeah,
you take the top of the W down to the bottom, and lo and behold, what does that magically do? It gives us what I refer to as confluence and a target price of 96 cents. Can you draw that out for them?
yeah. Have I drawn that correctly?
Yeah, put that down, right there. And then what price point does that give us?
I haven't drawn that right.
Yeah, your W, well, really the neckline's right here to the top.
You get that right. Is that the right? This is about the neckline right there.
Lower.
Bit lower.
Yep.
About there.
I'm gonna go lower. Right there.
Yeah.
Roughly. Well, I'm not sure. Let's not worry about that. That's the pattern I see. So we've got that point of control.
Yeah, so XRP isn't looking good. It's not a buy there. I mean, look, we're in a bear market, and if it plays out as normal, these altcoins go down about 95% there. So, yeah, that's what I would look for there. Tau is the next Bitcoin, your weekly buying. And look, that can be a strategy. Look, the one thing I do like about Tau, Bitenza Tau, is that it's too busy on that one. The one thing that I do like about it is that it's got a 21 million supply like Bitcoin. Obviously, it's not 70,000 at the moment. It's sitting at 176. And this is another one you could use a dollar cost average strategy. How are you playing Tau and Solana at the moment? Because I know you've got buys of at the moment.
Yeah, so Solana underperformed my Bitcoin move, and it was only because I made money on Bitcoin that it sort of ate up the losses that I had on Solana from my daily buys.
Yeah.
So I sold Solana when I sold Bitcoin, and I have it still buying. I think it's 300 a day. So I'm really not that anxious to chase. You kind of convinced me a little bit that it's a bit too early for any of the alts. And even though I do want to own a fairly large position of Solana, and it would take a while to accumulate, six figures at $300 a day. It would take a while.
Yeah.
I would like to have that type of position if I ended up, but you kind of convinced me that we're going sub, going down to 40, 30
And look,
bucks.
if we don't, I'd rather take trades on the way back up. I'd rather take where the chart is bullish, not bearish, rather than trying to catch a falling knife and buying a dip that keeps dipping. But I know that some people do like the dollar cost average strategy. They're happy to average down, and then they can load more in right at the bottom, and that's fine if you've got the liquidity and the time, and that's your strategy. However, for me, I would say, like for Tau, I think Tau could get down to $50 or $70. Historically, that's generally what we see for altcoins. We generally see altcoins move down around 90 to 95%. So I'm waiting. Look, I have some Tau that I've staked that I'm getting yield on, and it's going to be more Tau because I always hold a little bit of those that I have conviction with. And this would be the same of Sui, Solana, and Tau. Look, I'm not a big believer. I think Ondo, as Josh would say it, fumbled the ball. They were meant to get stocks on chain, and by the time they did, Solana did it.
It's one of, to your point, Mark, that was one of the additional reasons why I said to myself, Solana kind of outperformed Ethereum. It beat Ondo at its own game.
Yeah.
And it really did better than Sui. Now, Sui has great performance, but the Solana network grew more than the Sui network. And so when I looked at it, I considered it best in class for what it is. And that's why I have conviction. Now, I'm still buying right now $300 a day. I'm not heavy high conviction on accumulating the alts yet. So I'm just
Yeah,
not.
I'm the same. I mean, Bitcoin dominance was peaking. That's not a time to buy altcoins. That's a
Yeah.
time not to be in altcoins. We wanna wait for Bitcoin dominance to drop. We want to wait. You can look other charts. Total market cap 2 and total market cap 3. You can go to. But look, I just think for altcoins, that it's just not. They're not buys for me at the moment unless you've got a bit of a dollar cost average strategy. Historically they'll go about 90-95%. So for Solana, that's going to take us down to about $25 to $30. Okay. For Potenza Tau, that's going to take us down to about $50 to $70. For Sui, that's going to take us down to about 50 to 60 cents. Okay. And some alts are never going to recover. And you've got to be careful, because I'm not going to just blindly buy altcoins because they're cheap. You want to see the 9 crossing the 20. You want to see the 50-week moving average breached. And you want to be careful that if those levels get lost, you want to get out of them, because it could just be a bull trap, a dead cat bounce. And most altcoins will not recover. Well over 90% of altcoins die, and they never come back. So you just need to be very careful with those. Josh, what are you calling the Bitcoin bottom? I think you shared about that the other day. That was
Well, I haven't called the Bitcoin bottom. I see
for a
that
number.
the next time I buy a full Bitcoin is probably going to be, well, I had kind of thought I might buy one at 57,000 and begin to really ramp up the buys. There's a path. I mean, there's a technical path as low as 38,000. An argument that could be made
Yeah.
that it would go that low. And I think that, I can't worry about that, because this is where I've already learned. We talk all the time and we encourage you guys to learn from your losses. I didn't have a big loss, but if you look at the loss of opportunity
Wow,
for
that's good.
Bitcoin that went up from 15,000 to 130,000,
Yeah.
I lost that opportunity by not owning more. Did I have more money to invest in Bitcoin when it was below 30K? Yes, I had deep pockets, deep pockets. And if I had loaded that money in, put in $500,000 or $1 million, and it 7x'd, trust me, that $7 million would cover a lot of expenses. So that lost opportunity is what reshaped my thinking, and that's why I'm not going to miss the boat again. And that's why I'm not concerned. I've said this, I'll say it again, Mark. Nobody's going to care if the bottom was at 50 or 40 when Bitcoin is back above 100. I promise you. And I gave the same analogy on a Stock Squad video with Keenan and Larry and Mo. And I said when we were at 20K, actually we weren't. We were at 15. We were at 17,000. And I said to them then, right? I said nobody's going to care about having missed the bottom if the bottom was even 12K. If we get back to 60 to 80,000. That was the
Yeah.
example I gave
Yeah.
then. Nobody's going to sit there and go, "Oh, I regret buying that
That's true.
Bitcoin at 17,000." And it's the same thing now. I'm telling you, I know that can I be wrong? Could the world change? Could Bitcoin implode? Sure, all that could happen. But based on everything that we know right now, I am 100% confident that nobody's going to care whether the bottom is at 50 or 40. They're going to wish they had allocated more money, every available dollar they could, potentially. Nobody's going to care if this gets back above 100K.
Yeah.
Nobody's going to
Yeah.
sit there and go, "Oh, I shouldn't have bought that Bitcoin at 64,000. No, they're going to be laughing their way to the bank. Right?
Well, look what happened last
video.
cycle. Last cycle, Bitcoin went to 69K, and everybody was calling for a super cycle, and Bitcoin was going to 100K. That was the big thing, and everybody got wrecked. Okay, and down we went. And then everybody said, well, it's not going to drop as much because we went up so high, and now Michael Saylor is buying, and Elon bought, and Tesla, and more companies are going to buy, and we got an ETF.
I wish that
coming.
Elon bought more, but he hasn't bought anymore.
No. And
But Michael Saylor's been buying.
well, yeah, selling MicroStrategy to buy Bitcoin.
Yeah, exactly.
Pray for the MicroStrategy holders out there. Michael Saylor's using your money to buy more Bitcoin. You're paying for his Bitcoin. Anyway, I digress. But and what happened was suddenly it got really bearish, because all of a sudden, Luna, Terra collapsed. FTX collapsed, a whole bunch of other
That was
exchanges
all
collapsed.
manufactured.
And people say, and then suddenly people flip from super cycle to Bitcoin's going to 5K. And I'm like, oh, I think it might be time to buy now. And
Yep.
so when people were, a good sell signal was when people were saying, when Tom Lee was coming on the TV going, oh, it's going to 200K and Eric Trump 250 by January, that was a good sell signal. Okay. And then when people were saying, hey, Bitcoin's going to 5K last cycle, that was a good buy signal. You can just look at the fear and the greed that's in the market and the sentiment. And so I think we could possibly see the same. People are saying, oh, it's not going to go as low, it's not going to go as deep, and I just think it will. And then people will change the tune and go, oh, it's going deeper. And then, and that's the point where, yeah, we could look at the charts and say, hey, this could be a time to buy or to accumulate. We haven't really seen any major black swan event at all. No big scandals come out. There's been no exchange that has gone under. And maybe they're just more prepared this time, like with hurricanes, rebuild and be more prepared. We haven't seen a MicroStrategy failure where they have to sell their Bitcoin or something like that, or quantum computers are at a level to hack Bitcoin. So I do think a lot of where Bitcoin's bottom will depend upon what kind of news events may drive fear to push the market a whole lot lower there. But I've still got my eye on, it's always seemed to gotten to the 300-week moving average. That's sitting at about 50K. So I think it at least gets to 50K again, maybe a little bit lower to that 45, 42. And then I'm with Josh on a worst case scenario down in those 30s, maybe low 30s, high 20, 29, 30, 30. And I'll say this, and I say this a lot on my channel here. Those who try and pick bottoms get smelly fingers, okay? And Josh is exactly right. I don't try and time the exact bottom. I like to spot bullish reversals to the upside, trend shifts, momentum change, volume comes in, and I take the trade on the way up. And if trend and volume and momentum shift to the downside, then I can get out of the trade this way. I'm not going to miss out there. All right, let's see if we have any other question. We might wrap this up. Appreciate all the likes there. That everybody's liked this channel. Amazing to have Josh on here. Amazing to visit with Josh in person. Of course, won't go to 30s, says Butter. Well, it may not. You might be right, and I'm prepared to say that. What hurts the most when everyone at work was talking about buying it. Yeah, everybody was saying XRP going to $10 and $50 and
just so
$100, and it's like bear market time.
Yeah,
That was another top signal there.
well, yeah, and
OnlyFans influencers were like,
yeah,
play around. When XRP goes to $10, I'm going to pick one of my followers to play a round of golf with me, and I'm like, okay, the top's probably in now.
Yeah, no, I gave a realistic top on my channel, and I'm not going to sit here and boast, but XRP was always handled purely from a technical view on the Stocks with Josh show. There was never any hype. There was no false narrative of reading the charts. I gave a potential top, which was far less than most people, and I gave the breakdown. All of it proved to be true. That's why I insist on trying to follow the charts, not trying to force the charts into the pattern that you would like them to be. That's why we emphasize so much today on what's happened in the SPY. It doesn't mean, someone says that the charts are only right 60% of the time. That's false. The charts are always right 100% of the time. Our ability to interpret them correctly varies and probably is closer to 60% of the time. But if you go back and you look at the charts always told you what was happening. And the charts is a broad term for price, structure, momentum, volume, as well as institutional money flow. And again, I want to talk about that, $15 million flooding into put buys down to 630, 2 weeks out. If that's not the market hedging and taking a fearful position and gunning for some protection, that of course is what caused the VIX to spike. You can trade the UVXY, you can trade the VXX. But I would tell you, don't try to show up now that these spikes are occurring. It might be too late. It might be too late. We're gonna get a little more. But then we're going to see the markets calm down. The markets will not be back towards all-time highs until the VIX gets back below 21. In last week's video, I told everybody if you want a perfect gauge as to when you can begin to be less fearful about a flash crash. That's when the market calms down and smart money begins to unwind their insurance, which is put in the form of puts, which is illustrated on the VIX chart. And we're way above that right now. So,
Mm.
that's all there's so many things that are kind of simple here, but you just got to get more and more comfortable with them and you'll understand how to do this.
Yeah, exactly. And I think, the number one, someone was talking about how they didn't sell the top, and that's tough. But I think you can be prepared for the next cycle, and really just focus on, trading the trend. If you trade the trend, and establish, and I'll bring up the XRP chart, for example, here. Just where it would have been obvious just to get out on this chart here, but you can see, the 9 EMA, it's time to get out. Sorry, that's Tau actually. So it would have been time to get out of that trade there, and any time it crossed, you could have gotten into the trade. And so you can kind of see, even with the top, even though you wouldn't have, it's like, would you rather have sold, 556, or still be bag holding down at 175? And it's tough for people because they go, well, I should have sold at 744, and then it's down to 570, and they think, well, I've missed all that, and what if it pops back up? And then they're just caught in the cycle and just goes lower and lower. Have a very clear and disciplined strategy. For me, if it loses the 9, it's out, it's over, it's gone, and I'll let it. And then the 9 is resistance all the way down until it's not, and then it pops above. Look at this, pops above, retest here, beautiful, and then you're off to the races there. And then you see that happen again here, and then when it breaks down here. So that's a way of trading that I've found to be very, very useful. And on the weekly time frame, you're not having to watch the chart. There's many, many weeks between it dropping down. It took 1, 2, 3, 4, 5, 6, 7 weeks before you would have got back in again. So there's plenty of time to keep an eye on the chart and watch. That's just a very simple strategy. Look, I know it's not buying the exact bottom and selling the exact top. It's just a very simple way of confirming that there is going to be. And of course, for those of you who use the tribal trades indicator there, I don't know if I can turn that on. I can't see with all the lights there. But that also does help. The Skittles indicator, as Josh calls it, does actually help get you out a little bit earlier, so that not always at the top and not always at the bottom there, as Josh says. And you can use the RSI too. You can see when the RSI breaks through there, you can see it's kind of crossing the 9 as well. So there's other little tools, and Josh gives some great technicals and advice using the RSI and the break of those lines to actually take trades there. Absolutely fantastic. All righty, well, I think we're good for today. Josh, I appreciate having you on. Let's just have one final word from you there, to the community. Your thoughts over the weekend. What are your considerations over the weekend coming into next week? What are some of the things that you're going to be the forefront of your mind?
FUD, fear, uncertainty, and doubt. And the retail trader gets caught in trading emotions, and they're influenced by everything from a red to green thumbnail or bullishness, sentiment or bearish sentiment. You got to get off that track, and you've got to begin to decide, what is my trade plan? How am I controlling risk? How am I taking profit? Am I holding my losers longer than my winners? There's these different things that we have to work through before you become a very consistent trader. This is a game that's worth learning, in my opinion. And I would advise, personally, if you're my close friends and family, I would say never walk away. You need a Wall Street plan. And as I say it all the time to my community, and I'll say it again to you guys, I mean, AI, robots, we're living in the age of Jetsons. I know a lot of folks who are too young to know that reference, but we're living in future times.
Yeah.
And you got to be an owner and an investor in these companies to survive what's coming. And you can't put your hope in the politicians. Washington is a swamp. They're not going to bail you out, and Social Security isn't going to save you. We're not living in your parents' America, and we're not living in your grandparents' America. Pensions and 401ks are built off of the bond market. The bond market is beholden to the national debt, and it's a big problem. So you got to identify what is it that's exciting right now? What is it that's changing the world? What is it that's brand new? That's AI stocks and it's robots. And AI has hyped up the markets and ran us up from 2023 all the way to 2026. And now we're cooling. What's coming next? It's going to be robotic stocks, and there's going to be a ton of them. We don't have all the ones that are going to be making us millionaires. We don't have those in view right now. But if you lost money on the downturn and you weren't prepared for the downturn, it's time to get positioned because there's so much opportunity. I love saying it. Wall Street is a place to make exponential money. You cannot make trading your time for money what Wall Street will give you if you position yourself correctly. And I think it's a game, in my opinion. We have to move to out of the white picket fence home with two-car dream and move on to Wall Street, kick down the golden doors, and take possession of what the new American dream is. And that's uncomfortable change, but I believe it's possible for everybody. YouTube has changed things. You're able to share information. I came up when I was learning Wall Street and trying to figure out how to set a stop loss and take profit plan. I had to read a thing called books that were made out of trees. Okay. I had to go to Barnes and Noble to get my information. I'd buy a coffee and I'd get all of the books I couldn't afford to buy. I'd get them sticky with my fingers as I was thumbing through taking notes. You guys are here. We have a much greater opportunity for shared knowledge. AI is multiplying that, and I just want to encourage you to take it seriously. Treat it like it's a job, and move out of dating Wall Street or treating it like a side gig or a hustle or a hobby, and get serious about it, because I think that serious change is coming that's going to affect people. White collar jobs going to get wiped out, and then that's with AI, right? And you got companies like Amazon that's literally saying, if we've got employees that are not demonstrating AI efficiency, prompt building, said we're cutting all of them. There's no such thing as not embracing AI right now. And that's phase one. Phase two is going to be the robots. That's going to literally take away the labor jobs. Elon's going to send those robots to pick up the trash. And so the guy hanging on the back of the trash truck isn't going to have a job, right? And then there aren't going to be any bonds based on US debt for your pension. So get serious about what we're talking about today, because there is life-changing opportunity on Wall Street.
Yeah, I love that. And before we go, I would say one thing. Josh is one of the hardest working people that you will ever meet. Not only is he one of the most generous people, huge vision and heart, but very, very, very hardworking. And what you see there behind every word that he speaks is just backed up with action. It's not just words, it is life in action. And I want to encourage you, if you're sitting there today and maybe you've made some mistakes and your financial stocks or crypto trades haven't quite worked out. Listen, there's a story, and I've shared this before, probably a few months ago. Let me say it again. That a teacher asked a student to ask, when was the best time to plant a tree, and the student said, well, 20 years ago would have been the best time, because then the tree would be full grown. And the teacher said, great. And they said, when's the second best time to plant that tree? And the student thought about it for a moment and said, today. And that's exactly right. Today is the first day of the rest of your life. And if you don't like what you're seeing in your life, get up and change the channel. If you want to change something in your life, you can just change something in your life. You say, well, it's not that simple. I'm not saying that it would be easy. If it would be easy, everybody would be doing it. Everybody would be doing it if it was easy. It's hard for a reason. And it's either hard now or hard later. You just have to choose your hard. You put in the hard work now, and it'll be easy later. If you just ride the easy lane now, then it will be much harder later. And so you just want to choose your hard, plant your tree, put your stake in the ground, and say, this is what 2026 is going to look like for me. And I want to give a shout out. I don't know if April's on this feed. One of the incredible crown traders in the tribal trades community who came into the Discord really as a fairly novice beginner, maybe intermediate trader. I don't want to, she might say, well, I was intermediate, but I don't want to, put her too far down there with her trading skills when she came in, but she wasn't making any money. And she started off with taking the trades, learning, grinding, working hard, all the while running her own business with her husband. And she just really went after it and put in the work. And I say this, listen, don't complain about the results that you don't get from the work that you didn't put in, because ultimately you won't get what you wish for. You will get what you work for. And I have to give her a huge shout out. She gets up and prays before she puts out trades or takes trades. She puts a lot of hard work, gets up early in the morning to find amazing trades for the community and for herself. And she's just done an incredible job. And I do want to just honor her and give her a big shout out, because she epitomizes everything of what Josh and I talk about on here, about having trade plans, learning processes, learning systems. And before long, she wasn't just making $50 a day, she's making thousands of dollars a day on her trades by learning systems, having a trade plan, having disciplined stop loss and take profit, and just being able to find those amazing trade setups. So listen, you can do it. If you're out there and thinking, no, it's just for you guys, no, it's for everybody out there. Trading is for everybody. Financial freedom out there is for everybody. It's up to you to choose to take hold of it, to put in the work. And listen, it took me a few years to really refine my trading strategy. I got liquidated a few times when I first started crypto trading, but you just keep getting back up over and over and over again. You get knocked down. What's that song? You get knocked down, but I get up again. You're never gonna keep me down. I get knocked down. I get up again. You're never gonna keep me down. Let that be the story of your life. Let that be the theme of your life. That when you wake up in the morning, you say, hey, something great's going to happen for me today. I'm going to put in the time. I'm going to put in the effort. And I think it's going to pay off there. All right. Well, I'm going to finish off there. I think that's a good spot to close it out. I appreciate sharing your thoughts of wisdom. I appreciate you, and I appreciate you being on the channel here, my first guest. Very honored to have you on here. And until the next episode, or until we see you all in the Discord, happy trading.
Thank you, Mark.